Good evening, all. Ira Epstein, and here we are with your stock ETF spider wrap-up. And this wrap-up is for Thursday, and this is the 2nd of February, 2023, 6:45 p.m. All right, my friends, this is such an important report that we're doing. First, you're going to see that we're hitting Bollinger Bands up and down all over the board. If you don't know how to work with the Bollinger Band the way I teach it, shame on you. You can go to our website, take the course. It's really simple. IraEpstein.com, under the word education, enhanced Bollinger Band course. You're there. We're going to get to them. So let's talk about what we've had. For 2 days, we are looking at central bankers raising interest rates, and the market seems unfazed by it. I use the word unfazed very carefully. As you know, I think Fed Chair Powell did a terrible job yesterday. I think that he didn't understand, didn't acknowledge something, and he's a bright guy. But when you have falling interest rates, which we've had, and you have a rising stock market, you have an easing of financial conditions. Any way you want to cut it, okay? And that's what we've had. Miss Lagarde came out today, raised rates 50 basis points, and surprised the heck out of everybody by announcing they're going to go with another 50 basis point hike in March, that she is data dependent. And the first thing you go, well, how do you know you're going to go up in March if you're data dependent? This is February 2nd. Her answer is the data is baked in. It's that hot. But after that, they'll go back to being fully, and they are, even with this, data dependent. The Bank of England raised theirs 50 basis points, but they sounded more dovish to me. There's more rates to come, but the economy's weak, blah, blah. Here's what the marketplace has been doing. The market doesn't care, the bearish news. It looks for the sliver. I can't explain this enough. For the sliver of news where, no, the Fed's weakening, they're all getting closer to where they're going to stop raising rates. They're going to hold there, and then it's going to come down. Why? Because they're all right. Inflation will start coming down on its own, and that means we got to own stocks now. Otherwise, we're going to miss something. For the bears, they have been rocked to their soul. The market has taken off all of January, and the first 2 days of February have been nothing but a slaughterhouse for those that are just bearish because they believe fundamentally that is the case. Can't get away from that. So you get to a point where even the euphoria of a market has a problem. And I use technical indicators, and they say right now I'm at that point. Now you'll say, boy, Ira, you're going to be dead in the water. No. There's a difference. When you're bullish and you hit a Bollinger Band, it's a time to come out, not a time to get bearish. The bear will get hurt. The bull may not catch the whole wave. Okay, I'm willing to do that over and over. For the ones that are bearish that we're going to look at on these charts and not embedded, that is the time you come out. And if it goes lower, say la vie. There's always a way back in. But when you hit these bands, it is not a sign yet, because I'm working on something about that, where you probe the other side. The band itself never tells you to go short at the top or long at the bottom. You can do that with momentum mixed in, not the band by itself, okay? The last thing that we have to understand is you have jobs report tomorrow. The market's going to focus in on that. Tonight, we had a slew of companies report. Amazon, Apple, Ford, Starbucks. I'm sure I missed some of the other big ones in there. Meta today was up 24%. The stock has doubled in no time at all. And it just shows you that these markets are dying to be bought. All right. The public can't wait to buy these markets. They don't want to sell them. They don't believe in that. They don't believe that. They believe one thing, that the worst of COVID is over and that COVID caused the inflation scenario via the easy money that foreign countries and the United States had to throw at their economies to keep them alive. We're fighting off of that, but underneath everything's going to be fine. I'm not agreeing or disagreeing. That's what I think is going on. When we take a look at the S&P, it's very hard to be bearish this. I thought the market was going to have much more trouble at the 410. the double top there, and I even went back here and showed you that number. Instead, it's reached into this zone. Okay, it might go for it. I know that early on, all the stock indices in the early evening trade are lower because the big companies that came out with earnings, as a group, they were terrible. But again, the market has a way of saying terrible, and then it'll say, that means the worst is behind them. Come the next quarter, they don't have the currency play because the dollar has been breaking, not going up. They don't have that headwind. The COVID situation's behind the market. No, I think things are going to get better. That's the mentality at work. Okay. You've got higher lows, higher highs. My work has been bullish. Been on here with you. You had a bullish crossover. You've made a new high. Did exactly what I teach you here. Now get ready. This is where the problem comes in. You hit the Bollinger Band yesterday. You're over it again today. That's 2 days in a row that you're over it. You typically don't go beyond 5 before you pull back under it. Pulling back under it isn't a bear signal. All it is a sign that the market's getting ahead of itself by being over that band. Support's all the way down at the 399.40 level, and that number will jump tomorrow, just the way that moving averages do. It's going to lose numbers here and pick up numbers that actually move the market higher. So you're going to lose some of these as you're getting into the 18-day. And what happens is the weighting will carry it over that low. So this market's going to have pretty good support in the neighborhood of $4, $400, 402, something like that when it gets to that. But as long as you have this number embedded, that's all I care about. When I look at a chart, and what I teach you in my courses, is you have to learn to focus on the most important indicator, and they vary. If you're not embedded, this is not the indicator. Then you're looking at another one. But when it's embedded, momentum is stronger than price, and momentum leads price most of the time. There are situations where the two happen at the same time. Could price lead momentum? If a big event happens, yes, but without that big event, typically not. So the company all of a sudden had a bad accounting and millions are stolen, it might go broke. That's an event that, whoa, who saw something like that coming, all right? But barring things like that, a surprise event, typically momentum will lead price, and it leads it often by a day or two, which is beautiful because it gives you time, if you're a student of it, to adjust. The word is often. Nothing is all the time. So as I look at it, what is all the time is only 5% of the time are you going to stay above a Bollinger Band. Go on this chart. I know you're going to tell me, Ira, you are so wrong. You don't know what you're talking about because it's over and it's just going to keep running right now. Okay, you might be right. I don't think you are, but you might be right. I'll give you the benefit. Am I saying to go short? I am not. LIT. When you got up here to the Bollinger Band, that's where I think the pros took off part of their position. Why part? Because you're still embedded. But you have to learn to take money off the table, and on pullbacks, you have to decide, are you buying back in? I don't like challenging the first challenge of a 200-day average. I could be wrong, and often I am. What the heck? But history it's on my side. So we'll see if this market can stay up or not. I find it interesting that the copper associations in America, are making a move on the government saying we've got to do more, maybe making this a resource the U.S. has to protect. Why? Because the world is slowly seeing that demand is outpacing copper production. And all these new electric cars and all these new things, and when you get the next economic boom and you're building homes and you're doing infrastructure, copper is a key part of all this. And there's a problem with it. Remember, I predicted you're going to see $5 copper sooner than you think. In Apple, okay, so here's Apple up to the Bollinger Band, and for the first time today, the 200-day average. You haven't been there in months. So this is where I think some of the money came out of the market. All of it? Nope. You're embedded. Again, until that red line's under 79, if you're long, you're taking some money off the table. You're certainly not buying a Bollinger Band. Were the earnings bad? Did the Apple fall initially? Yeah, it fell 5%. But by 5:30, it had made it all back up. So who knows where it's going to be in the morning. AMC, this is a big resistance number now. This is your upper Bollinger Band and your 100-day average, and you're not trending. You have a lower low, higher high. I think you're range bound, but the range seems to be really the Bollinger Band down to the 100-day average, not to the lower Bollinger Band. In XLF, out you go of part of your position. You're embedded. So if you're long, first challenge of the Bollinger Band, bye-bye, you own it. Take some money off the table. Lose the whole reading, buy a reading under 79, out you go. Are you looking to be a buyer on breaks? Yes, and I teach you how to do that in the course as well. XLI, so long, the whole position. You're going to go, what the heck? Why? You're not embedded. You're overbought. Bye-bye. The easy money's gone, and the whole thing you dump as a trader. Stocks. You kept the embedded reading and you went back yesterday. Now you're over that upper Bollinger Band. You own it. I never want to own a market with new money over a Bollinger Band. I'm willing to hold it when I've got a pre-position on and it's embedded and it gets there. I'll take off some of my trades. So if I have 1,000 of something, maybe I'll peel off 200. Maybe I'll peel off another 100. It depends. And eventually I'm peeling out because that's what it says to do. Home builders, rock and roll time. They don't stop. Well, why? Oh, I forgot. I need a drink. If interest rates are going to fall and everybody thinks that the pause and the worst is behind us, then mortgage rates are going to fall. And if mortgage rates are going to fall in a housing shortage market, I want to own all these home builders. Is that difficult to see? I don't think so. But do I want to own them over a Bollinger Band? No. Do we have an embedded reading? Yes. Is this bullish? It is. Just not the spot to come in. XLE. Oh my gosh. You went down to the Bollinger Band today for the first time. You tell me. You didn't hit it yesterday. It's the first challenge of it there and the 100. What do I want to do? I would be telling my clients now, today, out. The easy money's out of that decline. Would I have had a client short? No. How do you get short? You're going to pick an exact top. It's been a straight decline. But that's the reality. That's the number that I know. No, I don't want to own it. Now, why is this market breaking? Why is copper down and the others? Because China hasn't yet come out of their melees with their COVID. That's really what is going on. It's a question of when this thing starts picking up. We know they want to pick up their economy. We know the government has said they're throwing money at housing and all these other things. But if the people are sick and the factories aren't running, you got to watch out. If everything were good, we'd see numbers out of China about COVID. The fact that you don't means there's something to hide. How bad it is, it won't matter. It, just like we saw, is at the height of our problem. It peaks and it goes away. That's what happens, and that's what's going to happen here. 2 years ago when COVID broke out, I came on here and I said, we're going to end up with this being the flu, and you're going to have to get a shot every year for God knows how long, and that you're going to deal with it in the end like a bad case of the flu. How off the money was that? Not that I'm a doctor. I read like a madman. I probably read more than most people, but I read from all over the world. And I kept reading what the scientists said, and they said, yeah, it's exactly what it is. It fits into that. It's going to mutate and keep mutating, and you'll be able to take, if we can get a vaccine, the vaccine becomes like other vaccines. That wasn't too far off. In GLD, okay, you have nothing here. Higher high, lower low, momentum was overbought and it's correcting. The craziness of silver. Have I not on each one of these shows said, you don't want to be involved in this? This is where the market spins. Do we have a base? Do we have a top? I don't know, but you get false moves regularly when that happens. How many of you had false? This morning, people were buying this market up at 22 and a quarter by the end of the day at 75 cents lower. But on the futures, they were buying the market on a futures contract full size. They were out $6,000 from the high to the close. And what happened? Same pattern. No, you stay away from those. You learn which patterns to walk away. Copper. Did I not say, and I know I did at the beginning of the week, the pattern is such where we're narrowing in the Bollinger Bands and you're going to start churning in here. It's just where you're at right now. Not a trend, a churn going nowhere up or down. That's what I'm foreseeing. TLT. Today you got to the 200-day average in the upper Bollinger Band. So long. If you're in this market and it's been in a bull pattern, so long. You're not embedded, you're overbought. UUP, you got down yesterday to the Bollinger Band bottom. Bang, today you pop right away from it. And FXE, you got up to the upper band yesterday, you backed away today, you're not embedded. I think the pros are out. I think they're out of the dollar and FXE, and they're waiting right now to see what do they do next. And that's where you and I are. What do you do next? You learn the Bollinger Bands. You're seeing it over and over. Do I have to hit you on the head? Take a look at this and do something about it. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.